Okay, we'll get started here. I'd like to officially welcome everyone and thank you for joining us today. I'm Kate Rader, the marketing specialist at MBS, and we also have Scott Muir, Vice President of Flexible Benefits, Kathy Ewell, Director of Relationship Management, Growth and Retention. And I'll let Steve introduce himself shortly as he'll be presenting. A copy of the presentation deck and a recording will be available after the webinar. Please submit any questions to the Q&A and we will get to them after the presentation. Thanks for joining us. And Steve, go ahead.
Thanks, Kate. Hi, everyone. I started the first one of these that we did earlier today on mute, so hopefully we're off to a better start already. But my name is Steve Sandel. I am part of the business development team at National Benefit Services. I've been at MBS since 2008, and for the most of that time, I was on our relationship management team and moved over to the business development side about 2 years ago. I want to thank everyone for joining us today. From what we saw from the registrations that we got back, is there are people joining us from a lot of different roles. A lot of you are more in the benefit specialist or benefit manager roles, HR managers, HR analyst, HR specialist, all different types of things. And then a lot of people from the broker and advisor side as well. Our focus today is going to be to talk about our experience with LSAs, what we've seen in the industry. I'm guessing that most of you are joining because you're curious about starting your LSA or maybe changing one that you've already got in place. Or if you're on the broker advisor side, you want to be able to consult with your clients on what's happening with LSAs. So hopefully as we talk today, we'll all learn something that will help whatever you're trying to accomplish in your role, and to be able to do that more effectively when it comes to LSAs. Just to give you an idea of what we're going to cover today, first we're going to talk about the basics of LSAs, what they are, why they're becoming increasingly popular. Next, we'll talk about the benefits of using an LSA compared to other alternatives. After that, we'll talk about some plan design situations, some things that you'll want to consider if you are thinking of designing your own LSA. We'll also include some options that are available and some examples of what we've seen other employers do. After that, we'll talk about how MBS is handling LSA administration to give you some options of, if you do want MBS to assist with your LSA, the different ways that we can do that. We'll also talk about some things to keep in consideration if you are going to start your LSA. And lastly, like Kate said, we'll leave some time for some questions and answers. So just like she said, if you've got questions throughout the discussion, feel free to submit those. And when we get to the end, we'll go through those as they've come in. So at MBS, we've been administering LSAs for a little over 5 years now, probably since 2018. I think before that, we saw administration as well, and what were the beginning phases of benefits that eventually became LSAs, primarily employers that were looking to provide their employees with some reimbursement options for fitness expenses, wellness expenses. So before those were even called LSAs, we were administering those. And over time, we've seen LSAs become what they are today, where there's just a broader range of what employers are trying to reimburse their employees for, what they're trying to help them with. Like I mentioned, I think LSAs in our world officially became a thing around that 2018 timeline, but it's really around COVID when they became increasingly popular. With the changes that employers and employees were facing at the time, people moving from an environment where they were working in the office to working at home, employers expanding their work base where they're not just in one location anymore, but they've got employees all over the country. They were trying to find different ways to first attract and retain talent, but also to help their employees with the situations that they were encountering, and to make sure that their employees felt that as the employer, they understood their situation and wanted to provide some support there. Since then, we've seen employers using LSAs for all different types of things. Now, as employers have started going back into the office as we've approached the end of COVID, and they're starting to work less from remote environments and more in the office, they're trying to support those types of things as well. So we'll talk about some different plan designs, some different challenges that employers have used LSAs to solve. We know that there are other solutions when it comes to to, I guess, presenting a solution for employees, the LSAs solve their other options. Another option would be just to give them a salary increase. We'll talk a little bit later about how LSAs might provide more of a benefit than just a salary increase. But there are other benefits than just that. These are some of the key benefits of offering LSAs, why employers are using them a lot more as we move forward from COVID. Primarily to point out two of the more key or more important ones is it's a personalized way to help help your employees with a situation that they may need additional assistance with. Along with that, LSAs are measurable. You can see not only when your employees are spending the money, but how they're spending the money, what expenses they're using their LSA funds on. And we've seen employers really take advantage of that as well. We can provide you with the data that you need to see how the funds are being spent. And we've got clients that really look at that data and do research on their own to find ways that they can expand their LSA to really make it more encompassing for all their employees. We have an LSA client that started an LSA a few years ago, and initially it was just primarily to promote wellness. So they reimburse things like gym memberships, at-home work equipment. And they started to see that that was valuable for some employees, but wellness may mean something different than it means to the next person. And so they tried really hard to track how the funds were being spent, but also tracking how employees wanted to be able to spend the funds. And they realized that employees wanted to use it for other things than just the gym memberships, the at-home work equipment. That fitness to some people may mean something different than it means to someone else. And so they started tracking what are employees asking us if they can use their LSA funds for. They found that there were other types of expenses. People were using them for tennis clubs, for swimming facilities, for apps that would help them with meditation, help them with their mental and emotional wellness. And they wanted to be able to provide a solution for all their employees, not just those that were going to the gym or working out at home. So over time, they really expanded their LSA, and now they've gotten it to the point where every single employee within that employer has a way to use those funds, and they find the LSA a valuable tool and a valuable benefit. It's really increased for that employer their ability to attract talent and retain talent. When you're considering how to design an LSA, these are the key things to focus on. So first, do you have an overall goal or a larger objective with offering the LSA, whether that's wellness, whether that's working from home, whether that's promoting emotional, mental, or financial success for your employees. LSAs, in terms of the benefits that we administer at MBS, they're the most flexible, and they give the employer the most control in terms of how they're designing that. Some key things to focus on in terms of plan design that we get asked about a lot are the actual funding portion of the benefit. How do the funds go into the benefit? How can we set that up? And it's really flexible in terms of you can pretty much do whatever you're wanting to do with your contributions to your LSA. It can be an annual amount that they get lump sum up front. It can be an amount that goes into their LSA on a weekly basis, bi-weekly basis, monthly, semi-monthly, semi-annual, whatever you want it to be. It can even be a funding amount where they get a certain amount every month, and then it's capped at a maximum dollar amount. So $50 a month until you reach a maximum balance of $600. And then at that point, the contributions stop until the employee starts to spend the funds. By doing that, employers have really been able to minimize their liability overall, so the balances can't just build and build and build. You have the same flexibility in terms of the rollover amounts, whether it's a full rollover, no rollover at all, a rollover that's capped at 50% of whatever an employee might get in the year. Employers are setting their LSAs up in all those different ways, and at MBS we can support those and set up our systems to match whatever you want your plan to be designed as. Another key feature of designing LSAs that employers have really focused on are the eligibility parameters. LSAs are a post-tax benefit, as I'm sure you're all aware, but because of that, there's less IRS guidance or less things that you need to follow when you're setting up your LSA. There's no non-discrimination testing rules. There's really relaxed eligibility requirements in terms of who's eligible for the benefit or how much you have to give to each employees. We've seen employers, if they have maybe a group or a role of employees that they feel are more valuable to the success of their organization, they can design an LSA so that the employees in that role or that group of employees may get a larger dollar amount going into the LSA. Or maybe those are the only employees that the employer wants to give LSA funds to. On the pre-tax side, when it comes to FSAs, HSAs, you're going to run into trouble if you design your LSA like that, where a small group of employees gets a larger benefit than the rest. But with an LSA, you have the flexibility and the ability to customize your LSA so that you can set it up that way if that's one of the objectives that you're trying to achieve. As I mentioned, LSAs initially started off with just kind of a small group of expenses an employer wanted to cover, usually focused around fitness and wellness, but they really expanded from there. Here you'll see some of the key expenses that a lot of employers are using their LSA to help their employees with. And this isn't a complete list either. So a lot of these are more what we would call master categories of expenses. So under fitness, you would find sporting goods, you would find gym memberships, different types of things. And with LSAs, MBS, you can choose a full master category. So you can say, I want anything that falls under the category of fitness to be reimbursed. Or you can pick and choose and say, I only want to reimburse my employees for gym memberships and for at-home work equipment, but I don't want to reimburse them for athletic apparel or for sporting goods. We've found that employers' LSAs work the best when they do want to have only certain expenses that they want to cover. If they start with maybe just a few categories and expand on it from there, so that they can continue to enhance the benefit and make it more all-encompassing for employees as they're trying to spend their funds. We've seen employers do a lot of different things with LSAs based off the objective that they're trying to achieve. And here you'll see some examples of that. So employers that are trying to promote healthy living may have an objective that they want to achieve, and we can help them identify the spending categories that they want to enable for their employees. Same thing for employers that may have an objective to help with family care, to help with employees purchasing their food. Some other examples would include professional development, work from home, leisure, and hobbies. And we've seen that employers have combined some of these as well. They may have more than just one objective that they want to achieve, and so they'll combine some of these different strategies and enable all these spending categories so that maybe an employee who's not working from home can still find a benefit in the LSA and use it in another way. At MBS, we administer our LSAs in 3 different types of ways. If you're considering opening an LSA and want MBS to assist you with that, we'd be very happy to do that, and just want to give you an idea of what your options are if you bring your LSA administration to MBS. So the first type of account setup that we offer is called an unrestricted account. That's an LSA where the funds are loaded onto a debit card, a MasterCard, and an employee can pretty much use that card to purchase expenses anywhere. There are certain places where the card won't work just because of MasterCard requirements. But in most cases, an employee is just going to swipe their card and the card's going to go through. And if for some reason it doesn't, they would just choose somewhere else to swipe their card and spend their funds that way. So with an unrestricted account, it's 100% card usage. There's not an option for manual reimbursement because employees could just swipe their card somewhere else if the transaction doesn't go through. The second type of account that we see, which I think is kind of the more common setup that employers want to go with, is a categorized account. So that would be a couple slides ago when we were looking at the different types of expenses that employers are using LSAs for. You would pick and choose those spendable categories that you want your LSAs to reimburse. And the way that MBS can set that up so that it works the way it's supposed to is every merchant that accepts a credit card or a debit card is assigned something called a merchant category code. And that merchant category code would define them as a merchant that's providing services of a specific type or selling a specific types of products. So when you select the different types of eligible expenses that you want to reimburse, MBS can compare those so that they align with merchant category codes for merchants that would be selling those products or providing services that would fall under those eligible expense categories. With a categorized account, in most cases, employees are just going to use their debit card to spend their funds, but there are certain times where that may not work 100% correct all the time. There may be rare circumstances where an employee tries to swipe their card for something that's eligible, and for one reason or another, the card transaction doesn't go through. An example that we've seen in the past is an employer that wanted to reimburse their employees for gym memberships, for fitness memberships, and the employee was going to the YMCA for their gym membership, tried to swipe their card, but it didn't go through because at the YMCA they were also providing a daycare service, and so their card transaction machine coded them as a daycare facility, and the card transaction didn't go through. In a situation like that, the employee could just submit a reimbursement using a reimbursement form, using our mobile app or our participant portal, attach their gym membership receipt or statement, and we'll reimburse them by check or direct deposit. So with a categorized account, it's largely card transactions, but an employee does have the ability to submit a manual reimbursement if for some reason the transaction doesn't go through. The last type of account that we administer at MBS is called a custom account. And that's an account where if you not only want to choose the types of expenses that are eligible or reimbursable, but you want to set specific guidelines or specific requirements that an employee has to meet before they can be reimbursed for those expenses. So a more common example of that would again be an employer that's looking to reimburse employees for fitness memberships, but they want to make sure that the employee is actually using that gym membership before they reimburse them. So they may put a stipulation in place that says we'll reimburse you for your gym membership, but we want to make sure that you're going to the gym at least 10 times in the month before you can be reimbursed. With a setup like that, we can't load the funds to the card and still ensure that the employee is going to the gym as often as they're supposed to. So that would have to be completely manual reimbursement. The employee would have to pay for it out of pocket and get reimbursed. They would have to submit the same documentation that shows that they've incurred the expense for the fitness membership. But along with that, to meet the second requirement, they'd have to get something from their gym that showed they had been to the gym 10 times in the month and submit that to us, and then we would reimburse them for that expense. As I mentioned a little bit before, we often get asked which of these is most common, and just to reiterate that, it is a categorized account. Employers are wanting to choose their eligible expenses because they often have a certain objective in mind with offering the LSA, but they also want the employees to have the convenience of spending the funds on their card. So the more common type of LSA that we see employers using most recently would be a categorized one where they choose the expenses, the employee can use the card, but if for some reason the card transaction doesn't go through, the employee still has the ability to submit a manual reimbursement and get reimbursed that way. There are some important things to consider if you're deciding to offer an LSA. I'm sure a lot of you are familiar with HSAs, FSAs, may have those in place for yourself as the employer, or for your clients if you're in the broker or advisor world. I think there's kind of two key differences when you're comparing an LSA to something like an HSA and an FSA, and it's largely related to the fact that with the HSA and FSA, they're pre-tax benefits and they're governed by our IRS regulations, where an LSA is post-tax and not governed by very many IRS regulations. Because of that main difference, the benefit is that as the employer, it gives you a lot more flexibility with designing your LSA, setting it up the way that you want it to be set up. With an HSA, you don't really have a lot of flexibility in terms of how you design it. You may decide how much the employer is going to contribute and who's going to be eligible with some rare exclusions that you can make. Same thing with an FSA. You can decide who's eligible. You can exclude small classes of employees, and you can decide if you want to offer a grace period, a run out period. But then in terms of eligible expenses, different things like that, you don't have a lot of control over how your FSA or HSA works. Where with an LSA, you can control all those things. You can control what's eligible, you can control who is eligible, and just how the benefit flows and how it works itself. So that's kind of the key pro when comparing an LSA to an HSA. But then again, the one downside is that they are a post-tax benefit. You don't have the pre-tax advantage that you do with the HSA and the FSA. When it comes to taxes, we get asked about that a lot, and we're not able to give legal advice, tax advice, so this isn't meant to be taken that way. But just to talk about what we've seen, how employers are handling the taxing aspect of it. There's really no clear guidance from the IRS. So if you are considering offering an LSA, we would recommend that you do talk with a tax advisor and figure out what they recommend is the best way for you to handle it. But what we've seen employers doing are two basic approaches. The first is that they tax the funds based off when they're used. So it doesn't matter when they make the funds available to the employee. The main thing that matters is when the employee spends the funds. And at that point, they'll add whatever the employee has spent kind of as additional imputed income to the employee's paycheck. We have employers that choose to do that at different points throughout the year. We can usually support you with whatever you choose is best for you, but we recommend that you do that kind of more on a per pay period basis. We have employers that'll do it monthly, that'll do it quarterly. We'll have employers that just do it at the end of the year. The reason that we recommend that you do it on a per paycheck basis is to be able to capture taxes for employees that may be terminating mid-year. If you're doing that every paycheck, you can add the taxes as imputed income to an employee's paycheck before they terminate and make sure that they're compliant in that regard to being taxed for using these funds. Where if you're just doing it at the end of the year, employees that have already terminated and have already received their last paycheck, you're not going to have the ability to add those taxes to their paycheck if you just do it at the end of the year. So that's one way employers are doing it, is they're taxing it based on when the funds are spent. The second way is something that's called constructive receipt. And that's the idea that the employee should be taxed on it as soon as the funds are made available to them. So regardless of when they spend it, or even if they spend it, employers are taxing the funds as soon as it becomes available to the employee. We often get asked what's more common, and I would say definitely it's the first approach, taxing the funds based on when they're spent. But again, we would definitely recommend that you get your own tax advice or legal advice to decide what approach is going to be best for you and what you feel most comfortable with. We do know that there are a lot of options that an employer could use instead of an LSA to achieve what they're trying to do, whether that's attracting talent, retaining talent, whether they have a specific objective that they're trying to achieve with their LSA. There are more options than just a lifestyle spending account. I think what we get asked commonly is, why wouldn't I just increase the salary for my employees? Why wouldn't I just give them a pay increase? And instead of putting $50 into an LSA for them every month, why don't I just increase their pay by $50 every month? And that is one way to do that, if that's what you're trying to do, is to give employees access to additional funds. From what we've seen, though, there's a difference in the way that the employee views that. If you think about giving the employee a salary increase of $50 a month, and we'll say that the employee is paid twice in the month, so that breaks down to $25 per paycheck. After taxes, it may be an additional spendable income of $16, $17 that's going to lead to on a per paycheck basis. I'm sure an employee would be happy about that, but the way that they're going to view that is that's their income. That's the money that they're earning for the job that they've been hired to do. Those are their funds. Where with an LSA, it's viewed a little bit differently. That's not just what they're getting for doing their job. They're still getting their paycheck, but this is a separate benefit on top of that they can use to purchase items that they might want to purchase. And it's a lot more tangible too. An example that I've seen, and I apologize if any of you on this webinar have had LSA discussions with me before, you probably heard this story before, but a year or so ago, I saw a post on LinkedIn from one of the clients that we worked with that had just started offering an LSA, and one of their employees had posted a picture of these new running shoes that they had just purchased. And they said something along the lines of, I love working for ABC Company. They put money into an LSA for me. And with those funds, I was able to go buy these running shoes. And I think that's a great example of the difference in how the employee is going to view it if the funds go into an LSA compared to just an increase in their paycheck. They're still going to be able to buy those running shoes if you increase their salary, but they're going to view that as money that they've saved from their paycheck for the work that they've been hired to do. They purchase those running shoes themselves. Where if you're putting money into an LSA, an employee can just watch that account balance build until they have enough in there to purchase whatever it is that they're wanting to buy. But they're going to view that as my employer bought me these shoes or whatever the item may be. So again, we understand that there are a lot of different options, but with an LSA, it is a great way to achieve a certain objective and also do it in a way that's meaningful and personal to your employees. I think that's the basics of what we wanted to cover today. So we'll go ahead and open it up for questions now. If you've been holding on to your questions, you can go ahead and send those into Kate. Kate, if we have any questions already, if you want to just start going down the list, we can get started on those.
Sure. Thanks, Steve. We do have a few questions. The first one is, what is the common ER contribution?
A common employer contribution from what we've seen and the employers that we work with, I think kind of the way that we've broken it down is anything from, if you're looking at it as like an annual contribution, because it can be broken out by month to month, paycheck to paycheck, whatever you want to be. But if you're just looking at the full annual amount that an employee will get within a year, anything from about $0 to $500 is pretty generous. Not all employers have an LSA, so just the fact that you're contributing something is generous. Anything from 500 to 800, I would say, is more generous, and anything from 800 and above for the year is probably what we would say is an extremely generous design and benefit in your LSA.
Great. Next one, can you set up a plan that covers multiple categories, for example, wellness and home office?
Yeah, good question. You can do that, and there are different ways that you can do it. One way to do that is to just do it where you put a contribution into LSA, and it's basically one bucket of funds, and then you have multiple categories or ways that an employee could spend that. So you could put $500 into one LSA, and the employee can use it for whatever they choose, whether it's wellness expenses or work from home expenses. Another thing that we've seen employers do is they designate separate buckets with separate contribution amounts for that. So an employer may say, I'm going to put $300 into one bucket of funds, and my employees can use that for work from home expenses. And then separately, I'm going to put $200 into a second bucket of funds, and employees can use that for wellness expenses. So with that, depending on what you're trying to achieve, you do have different options there where you can choose your different categories, and you can decide whether it's all encompassing and spent from one bucket of funds, or whether it's different buckets of funds with the different contribution amounts. But the good thing about the way our system works is if you do design it that second way, where it's separate buckets of funds, our card or our technology is set up in a way so that our system's going to handle everything for the employee. Our system's going to know, is this an expense that would qualify to be pulled from the work from home bucket, or is this an expense that would qualify to be pulled from the wellness bucket? And the employee doesn't have to do anything to distinguish that themselves.
The next question, if we set up an LSA account with a debit card, is it stackable with our current FSA or HSA debit card, or does it require a separate debit card for the LSA account?
Good question. So with the cards that we issue, if you're already with MBS for your FSA, HSA, a pre-tax benefit, those cards are stackable with other pre-tax benefits, but we want to distinguish pre-tax from post-tax. So if you did offer an LSA through MBS and you've already got that pre-tax card, the lifestyle spending account card would be different. And we do make it easy for the employee to know the difference. If they've got an FSA or an HSA card, it's a white card. If you were to offer an LSA2, the separate card that we send them would be a different color. It'll be blue, and it does say lifestyle spending account on the card so that they can distinguish which card they need to use. And again, if you do get to the point where you're distinguishing different buckets of funds under your LSA and you have a bucket for wellness expenses, work from home expenses, that can be stackable just on the LSA card.
Okay. The next question, how does funding happen for an LSA account?
So we already talked a little bit about the different ways that an employer can fund it in terms of making the funds available to the employee. So I think the other way that question could be asked that we haven't talked about is how MBS handles the funding between MBS and the employer. And the way that that works is, for those of you that have an FSA with us, it's pretty much the same way. We look at the total benefit or the total spendable amount that's available to all your employees. And then we collect a reserve that will help us pay claims from one invoicing period to the next. As the employer, you get to choose how often you want to be invoiced for spent funds or for paid claims. Your options would be daily, weekly, biweekly, or monthly. That's how often we'll invoice you based off your selection. But an example is if you select monthly claims, we're going to look at the total funds available to all your employees, and we're going to estimate this is what we think we need to pay claims for the first month. And we'll collect that as a reserve. Then at the end of the first month, we'll bill you for the funds that have been used. And you're basically replenishing your reserve again, giving us that reserve to pay claims for the second month, and it just continues on. So we collect a reserve up front, and then after that, we just bill you for the funds that have been used.
Okay. It looks like that will be all of the questions. If anyone has anything, please get it in quickly. If not, thank you for joining us today. If you have any other questions that have not been answered, you can submit those to your RM. We also would like suggestions on what type of webinars you'd be interested in, and you can also email your RM with those suggestions. Thanks again. Have a great day, and we will send out the webinar recording and presentation decks here in the next day or so.
Thanks, Kate. Thanks, everyone.
Thanks, Steve.
Thank you, everyone.
Thank you.